Welcome to Building the Future, hosted by Kevin Horick. With millions of listeners a month, Building the Future has quickly become one of the fastest rising programs, with a focus on interviewing startups, entrepreneurs, investors, CEOs, and more. The radio and TV show airs in 15 markets across the globe, including Silicon Valley. For full showtimes, past episodes, or to sponsor the show, please visit buildingthefutureshow.com.
Today's show is brought to you by OnPay, the new standard in payroll. You can pay employees and contractors in minutes, automate your payroll taxes and filings, as well as provide health benefits and HR in all 50 states. For more information, visit buildingthefutureshow.com/onpay. Welcome back to the show. Today we have Jim Franklin. He's a director, advisor, and investor. Jim, welcome to the show.
Thanks for having me.
Yeah, I'm excited to have you on the show. Selfishly, I think I've used a bunch of the products that you've been involved in throughout your career, but maybe before we get into all that stuff, let's get to know you a little bit better and start off with where you grew up.
You bet. I was born in Iowa, raised in Pennsylvania.
Okay.
Went to school at the College of William and Mary in Virginia,
Okay.
where I studied accounting as an undergrad.
What made you want to
They
take
have a really
that?
good accounting program. Well, it's a very good program, and the way that just like you climb tall mountains because they're there, it's like this is one of the best accounting programs in the country, and it's by reputation very hard, and doing hard things is fun. And so I did that, but with no real intention of being an accountant, especially after I learned about it. But I did pass the CPA exam, and I continued at William Mary and went to law school. And I didn't really want to be a lawyer either, but I thought I would balance out all that accounting with some reading and writing. And I got to law school and hated it. And so I cross-applied to the MBA program, and I did a JD MBA. And in the MBA program, I found my people. And I really like the sort of the combination of sort of math and business, sort of a quantitative orientation, but in a business context. And it was in that MBA program that I learned about venture capital. And I like chaos and uncertainty, and I did not want to have a boring life or predictable future. And so I sort of packed up my bags when I got out of school and moved to Boulder, Colorado. I also had found triathlon, a bit of a dabbler. So it's the swim, bike, run thing, and I could mix triathlon and venture capital to intersect in Boulder. And so I came out here to get where I live now in Boulder, Colorado, to be involved in the venture capital community and make a life for myself and pursue triathlon as an amateur. And that's how I got involved in the venture-backed community, but not as a VC. That was back in 1992, which seems like ancient history, but back then there were just sort of partners, and that was it, and very, very few firms. But there's no real concept of associates and principals and all the structure we have today. And so I couldn't just walk in the door out of school and become a VC. So I ended up being on the management side of venture-backed companies. At one point, I was a founder of a venture-backed company, but most of my career, I was a CFO or VP sales or a CEO or the general counsel of a business that might have been, 4 to 25 people, but it was, about to raise venture money, or I'd help them raise venture money, and then scaling that up to 100 people or 200 or more people, like in the case of SendGrid, and really bringing some of that business perspective and really a people perspective to the startup. Because oftentimes the founders bring the product perspective and the product market, and then there's all that other stuff that has to happen to make that product vision a reality, mostly around financing, raising money, and hiring people effectively.
Interesting. So I just want to step back for a second. What made you move to Boulder?
Well, living in Virginia and training for triathlon sort of full time while going to graduate school, I didn't really fit in too well.
Okay.
In Virginia, people on Sundays go to church and watch football, and that's not my thing. And so I like running and riding and swimming. And so you come to Boulder,
Sure.
People do a lot of swim, bike, run, and other things. And so I kind of found my people here, and just you would just see things. And I remember the cover of a J. Crew catalog when I was still living in Virginia. I had a picture of an old Land Cruiser with Colorado plates on it, like up in the mountains. And I had an old Land Cruiser. And I'm like, I need to have Colorado plates on my Land Cruiser.
No, that's cool, man.
That's just, I was like, it was a green and white Land Cruiser. Colorado plates are green and white. I'm like, that would just be really cool. And again, I didn't want to get a job in D.C. I interviewed in the D.C. area for like tax lawyer positions and this kind of thing. And I just thought, man, if I got one of these jobs, I would wake up 20 years later and just be really, really unhappy. And so I just sort of, made a big left turn and came out to Boulder with that old Land Cruiser and triathlon bike and a little laptop, and basically started networking. I had interviewed at Cooper's and Lybrand on the East Coast for a job in Denver. And the way Cooper's was organized is you don't organize. They're organized by geography. So I couldn't interview in D.C. for a job in Denver because you have to go to Denver first.
Okay.
And so I was like, all right, I'm going to move out. And so I moved out there, and I knew this one person, and he introduced me to Rocky's Venture Club. And Rocky's Venture Club had been around since the mid-'80s, putting on like monthly pitch events and content for startups. And the people at Rocky sort of grabbed me and said, hey, we're going to put you to work as a volunteer, because they recognized that I had something to give. I think that's an important lesson, that everyone has something to give to the ecosystem. And if you're, in my case, 26, out of school, just don't know anything about anything other than academic stuff, but I had my time. And so I could be on the membership committee, and I could call first-time attendees and say, thanks for coming, come again next month. Or I could call, on membership, on sponsors. You call the lawyers and accountants and the bankers and say, hey, would you, re-up your sponsorship for next year? I could call all the VCs and say, hey, would you come and be on one of our panels for how to raise money in these times and those sorts of panels. And so I really got to be super well connected into the venture capital community. And sort of everybody knew who I was and how I operated. And it's those fundamentals, right? Showing up on time, saying please and thank you, just following through on the stuff you do. And it made it easier for me to get sort of drafted onto teams when you're a known quantity and you're known to be just generally helpful. And then creating a large network became very powerful over the years. Like when you need to recruit people.
Sure.
When I was a founder, we raised $5 million as a Series A, which back then was your first raise. We did talk about seeds and pre-seeds and all that stuff. But we hired 55 people in 30, 60 days or something.
Wow.
Because I had sort of attracted a tribe of people who said, oh, I'd love to work with you, right? If you're funded, I need a job, need a paycheck. So I can't just go, start a company with you. But I found two co-founders where we could go start a company. And when we got that check, it was just easy to say, okay, boom, we're funded, let's go. And just stand up all the departments and get after it.
Very
Startup
cool.
didn't work, but, it's a journey, right? There's many chapters in that journey. We went through that money in about 5 quarters.
Wow.
And weren't able to raise any Series B. We could do a podcast another time on that. Yeah, managing in a down market. We had raised money in an up market, but the world changed on us just as we were closing that financing. And so we had raised money in up market, had to manage that money in a down market, which was quite a difficult transition. And I think we just went through that now in March and April. That people have raised a lot of money now, and now they'll be operating in a very different world than they raised their money in.
No, I would love to have that longer discussion with you because, it's very, very timely. But walk us through some of your other career, because you've been at Oracle. Obviously, you were the CEO of SendGrid. Can you talk about some of that and your experience at those companies?
You bet. I think my first breakthrough was the first job I got was called SFM, Shit for Money. I was doing a job in Denver, basically for a wealthy individual who owned a bunch of businesses that weren't tech companies, and they were barely legal. And I was helping keeping him just inside of the law. So that's not a good job. But it gave me enough money to pay the rent, and I could do all my venture capital, volunteering stuff was sort of my main thing. So I would spend, I don't know how many hours a week, but it was like 12 bucks. It was to all my friends were. It was my network. I just moved. I didn't know anybody. So I just leaned into it heavily. And so I did the SFM job for 2 years while I was like the Uber volunteer at Rockies. And then, one night at a bar late at night, a guy who'd started a company with $300,000, spent it, lost it, racked up some debt, and kind of crash this company, was going to restart the company with the best product person, the best salesperson, and him as the founder. But he needed a fourth sort of co-founder of restarting this business who had some financial skills, some legal skills, and just could, generally hustle. And so I would join that team in the restart. And I was the CFO and GC, and that was Decisioneering, makers of Crystal Ball software, which does Monte Carlo simulations in Excel. At any rate, that business we ended up growing profitably for a number of years. And it was really my favorite business because the intensity of sort of growing your first company is hard to replicate. And doing it without venture capital, but doing it on sales was just tremendous discipline. And that was, very rewarding. That business, I had was CFO, and then I became the VP of sales. They offered me the CEO job, but I had to commit to stay for a year. And I was starting a company on the side. Okay. I've been doing one business for 4 or 5 years, and it was back in the first bubble. Everyone had their startup, and I'd rather be a founder than an executive at a company. And so when I said I couldn't stay for a year, they fired me on the spot, and I was like, shit.
Wow.
And so and I'm like, all right, so now I'm a founder. And that's when we raised the $5 million, and I was able to, hire a bunch of people, including from my previous employer, which they weren't super happy about, but, we get over that stuff. Then I had my own company. Again, I was the CFO and founder, but really had 2 co-founders. We ran it like a partnership. We did online baby photos. It's called Web Families. Okay. We had a partnership with the Hospital Corporation of America, which really launched the business, because we were able to lock up their 100 hospitals on day 0 before we even incorporated.
Wow.
And really having HCA commit to use our solution if we build it was how we got the money. Because we wouldn't get the money if we didn't have HCA, on the phone saying, give these guys the money and we'll use this system-wide, which is 1 million moms in the U.S. go through HCA hospitals every year. And that was our sort of install base. But economics didn't work. The world changed on us. We couldn't raise the Series B. And so when that company crashed, I, volunteered to do a neat wind-up. And again, being a lawyer and accountant, we didn't crash unexpectedly. We crashed, very neatly. I really brought the business down to 0 cash on exactly the day I said I would. And I told the board, I said, hey, I could use like $30,000 to pay a few people to, do some last tax returns. And you just need some muscle, frankly, to move some equipment around and do an asset sale and all that stuff. And they gave me the $30,000, no problem. And, I paid some people to line things up. And then the VC said, hey, I felt bad I lost all the money, but they're like, hey, look, we just gave $2.5 million to the security company down the road. Why don't you go down there and do your thing down there? And I said, well, I need a job, so okay. And then I said, what's my thing again? He said, the people and spreadsheets and stuff. I'm like, oh yeah, that I'll do that. So, I was the CFO at a company called Vericept, which is a security software company, which had a really terrific product founder, but really no management around any kind of business processes. So we ended up raising quite a bit of money there as well, $5 to $20 million, and brought in a CEO over the course of a couple of years. And when you bring in a CEO, they like to have their own CFO. So I got fired from that company too, which was
interesting.
The time wasn't too happy. The CEO says, hey, you're out. I'm bringing my own guy in. I'm like, But as luck would have it, the people who fired me 3 years before, they hired me back as CEO to run the first company, the crystal ball business.
Interesting.
And so that was very, very happy to be a CEO. And I think that's where I've had some conflict, like when I got fired the second time there at Vericept, is I acted like I was the CEO, but I wasn't. I was the number 2 guy, but I wanted to be the number 1 guy. I think it's important to have a personal mission statement. And for me, when I came to Colorado, it was like I wanted to be the CEO of a venture-backed company in Boulder, Colorado. And so it's like you kind of break that down. Like you want to be a CEO. Okay, what does that take? You want to be in Boulder. What does that take? You want to be behind a venture-backed company. What does that take? And so I got super networked into the VC world. I moved to Boulder, right? And so it's an expensive place to live. I just tell people you just got to learn how to live in half the house, right? don't buy as much. And it's like, how do you become a CEO? And I had some good coaching on that from a guy who said there's like three parts of the business. There's the build it, there's the sell it, there's the pay for it. And so you need to be dangerous in two of those three disciplines to be the CEO. And I was good at the pay for it part. And so then I had some experience then as a VP sales. I ended up getting that nod then to be CEO of a company again. I knew the market, knew the product really well. I knew a fair amount of the employees there from my first tour of duty. And that was the company then that we ended up growing the second time and then sold it to Oracle in 2007.
Very cool.
And so we actually sold it to Hyperion just as Hyperion was rolling into Oracle. And lots of stories around how to sell a company and why being like, a lawyer and accountant, we ran our company due diligence ready like all the time. And
smart.
when it was time to sell, we were able to sell fast and easy from the buyer's point of view, which is super important because Godfrey Sullivan was running Hyperion. When we kind of came along, again, through a connection I met through all this networking I've done, and that turned out to be a neighbor of mine. Met him at Jackson Hole at a VC boondoggle. It turns out we live on the same street in Boulder.
Wow.
And he knew Godfrey well. He says, if you ever want to meet Godfrey, let me know. And so 6 months later, I said, sure, I'd like to meet Godfrey. It took 6 months later to get the meeting. And then, but I had a good chat with Godfrey and essentially sold the business on that first meeting. We had a good cultural alignment. Somewhat known for this cultural system called 4H, honest, hungry, humble, and happy. It was a system I came up with the second time I was fired to figure out how to avoid unhelpful conflict. And by having values alignment, understanding where you do have conflict with people, it's called the hiring system. Anyway, Hyperion had a very similar approach to our 4H people. So Godfrey looked at our 80 employees and thought, oh, you're just a natural snap in to Hyperion. And when you looked at all the legal, accounting, rev rec, all that stuff, we were super clean, cap table and whatnot. We actually were paying dividends to people. And your cap table's got to be tight when you're writing checks against your cap table to people. And so what was interesting was that Godfrey was selling Hyperion to Oracle at the same time he was buying our business.
Wow.
And so I asked him, after all this was done, I said, why did you buy our business? And he's like, well, one reason he could solve our shareholder problem, which I won't go into too much, but our crystal ball shareholders did not have that 4H consistency. And so we had it at the operating level of the business, but not at the board level. And so that created a lot of friction. And so Godfrey could solve that for me by giving me a 4H home for the business. And frankly, we were easy. He's like, you were just really easy to digest. So it wasn't a big deal for me, to have my corp dev people do their thing and wrap you guys in just as we were wrapping ourselves up and selling to Oracle. So literally I had no idea that we were about to become part of Oracle. It was, in fact, when I told my employees that Hyperion bought us, and I said, hey, Hyperion's like super nice company, just like us, 4H. One of the H's is humble. And the employees were pretty concerned. And I said, well, it's not like we sold ourselves to Oracle. I said that because Oracle's reputation is certainly not about humility. And so when I'm driving to work on the 29th day after our first acquisition, and I hear that on the radio, right, Oracle bought Hyperion, I thought, oh man,
that's hilarious.
About Oracle. Yeah, and so I went in front of the employees that morning. I did all hands, and I just said, so how about that? And the employees were like, what should we expect? And I said, I don't know, but we'll all find out together. And 100% of our employees came across the transition with Hyperion, and then they all went into Oracle. And some people have stayed, 10 plus years and had a great experience. I stayed for just short of 4 years, but I'd never worked for a big company. I want to make sure everyone had a good landing and transition. I want to make sure our customers, and we had a lot of key partners that helped us be successful and make sure they were integrated into the Oracle machinery. And that all took a lot of time and work. And frankly, Oracle paid you an insane amount of money just for your day job. What would pass for an exit, check in startup land is what Oracle, calls a paycheck or your, annual bonus check or something like that. And so it was nice after, working for 15 years for, very high accountability, low dollar jobs, cash jobs anyway, to be in a situation where you had a high dollar, but, low accountability. You work on a big company, it's not the same level of rigor and urgency as a business that needs to make payroll on Friday.
Right.
And so that was nice. Although frankly, I think my advice to your audience would be is to maybe not quite stay that long. At 3.5 years, you get a little soft, and it was hard to go back. You make enough money, you can't really retire, at least not in the lifestyle to which you become accustomed. But you can be very choosy about who you work with. Having several years worth of cash on hand, it's like, oh, that's nice. And so in September 2010, I quit Oracle, sort of funded my own hang time. I knew a lot of people around Colorado that skied 100 days or done these things. I never did that. I was always busy with these startups. But I will help startups. I always did this, no matter what my day job was. I probably spent 30 to 40% of my time in the ecosystem, just doing things and trying to be helpful. And whether that was when I was at Oracle or other places, at Oracle, we would use everybody's stuff. I had the control over checkbooks, and so we could sponsor things, and we could buy your stock. That's what big companies need to do to support startups, right? Is give them a purchase order, right? Put Oracle on their logo chart. So when they go to raise money, they say, well, companies like Oracle, are you relying on us to do our analytics or whatever it is? And so there's a lot of interplay there. Anyway, so when I was out of Oracle and sort of looking for what I was going to do next in life, I'd known Brad Feld a long time, the famous investor from Boulder that's now at Foundry Group, and Mobius before that. And I talked to a lot of people, and I said, Brad, people say I'm retired. I'm not really retired. He goes, oh, no, you're on sabbatical. He's like, just take a year, and get detached from, all the crystal ball stuff you've done for so long. And, we'll find something fun to do when you want to get, back into an operating role. I'm like, yeah, that's it, sabbatical. Well, then a month later, Brad calls and says, forget what I told you. What am I going to do for you? And that was SendGrid. And, SendGrid is just, if it's not a once-in-a-lifetime opportunity, it's probably once-in-a-decade opportunity where the business had just tremendous product market fit. And frankly, I'd never felt product market fit, and I haven't since, or seen it as an investor the way it was at SendGrid. It's just that sense of like you're getting pulled into the market rather than pushing. Like, at Oracle, it's all about push, right? Enterprise sales, and we're going to sell our stuff in our terms and our time frame, and boom. And with SendGrid, it was all bought. Nothing was sold. It wasn't sold to anybody. It was just developers talking to developers about there's a better way to do email for your cloud-based applications. And millennial developers, none of them want to do email. Just zero friction to outsourcing it. Yep. Like, just let SendGrid take care of it. And so, it was about a year and a half old, 25 people, $5 million raised from Brad. And the founders are fantastic people, but being product-oriented founders, they'd never spent $5 million before. And I'd had their life experience a couple of times, once unsuccessfully, and it's like, oh, well, there's some things you need to do. And really with SendGrid, it was when Amazon came out with their simple email service, right, that sort of filled the hole that SendGrid was designed to solve, that things got tricky. And so I joined a month after the Amazon announcement. And a lot of the CEO types around town like, Jim, why would you take that job? Amazon's going to kill him. I remember the very first day at SendGrid with the employees, and there was a chart getting passed around that had, showed SendGrid pricing and Amazon pricing, and Amazon was much lower. And, that's where everyone say, oh, it's going to kill SendGrid. And so at that first all hands meeting, I said to people, I'm like, a lot of people said, Jim, why are you taking this job, right? Like, you can get crushed. And I said, look at this chart. And I did my little happy dance, and I'm not a good dancer, but, it got the point across. Like, I was excited. I'm like, why are you excited? I'm like, who's on this chart? Amazon and SendGrid, right? It's like, they just made our company, right? It's like,
interesting.
And in fact, it was a huge accelerant to the business, because all the other cloud providers, Rackspace and Software and whatnot, they all needed a checkbox solution to compete against Amazon. And so we rather rapidly signed up every other cloud provider, IBM, Bluemix, Google, whatever, Microsoft, Azure, and we became the infrastructure for all the cloud providers that weren't fighting against Amazon. So that's how I ended up at SendGrid. SendGrid grew, continued to grow super fast from $1 million to almost $50 million of ARR in 3.5 years I was there. and we scaled from the 25 people to 250 people.
Wow.
The offices all over the place, and that was a lot of fun. It was the same management process I'd really developed 12 years earlier back at the Crystal Ball business when I first became a CEO, about just how you run a company and do management meetings and one-on-ones and this sort of thing. So while all these companies I've been talking about are very different, email infrastructure and security and math software and baby photos, the process is exactly the same. And actually, a fair number of the players are the same. The general counsel or CFO and some people I've worked with, we kind of go from business to business, and we do the same process around how do you manage a venture-backed company. And so you sort of come up with our own sort of professional management approach to venture-backed companies, from how you manage a board or the annual planning cycle or doing offsites and all these things. And so now that I've been out of SendGrid 6 years, and after my departures, it grew and it's going to be worth billions of dollars, which is not my wheelhouse of understanding companies of that scale, much less IPO and whatnot. But brought in another CEO and hired their team, and they took it on to be a public company with about $1 billion valuation. Wow. And then Twilio, who was one of our early partners, we were basically just drafting the Twilio B2D go-to-market model. They ended up buying the company for $3 billion. So that was fantastic financially. And so, now I am on on that other end of things, where I'm a limited partner in a number of the funds around town, especially new funds, first-time GPs, and a board member for a number of companies. Again, Brad Feld said I could be on 13 boards and still feel retired and unemployed. That is not correct. Maybe Brad could do that. I got on to 8 boards and I felt very busy. I'm like, this is Oracle with no paycheck. Like, that's not the trade I wanted. And so now I'm on like 3 or 4 boards, and that's just enough that keeps you in the mix of, CEOs and CFOs and VP sales and whatnot about, raising money and just the challenges of an operating company. And I try to be that independent board member who can remember what it was like to be an operator, but also appreciate, and I like VCs, right? VCs have, financed the ecosystem that has been my career. And so I try to be in that middle gear. Or if it's time to replace the CEO, I've been replaced, right? Again, I know how that works, right? And I know how it feels, probably more importantly. And when it's time to exit a founder, right, that has to happen too from time to time, and just helping people work through that. I think and now I'm an instructor, so I'll be teaching a venture capital course at the University of Colorado's MBA program this fall. And that sort of brings us all back to the circle from when I got my MBA and learned about venture capital. And how little I knew what I thought venture capital was versus the reality. There's so many things and so much opportunity for so many people to be involved, regardless of race and gender and these things. And you don't have to be a CFO or be a venture capitalist, but there's a lot of ways to have a great life and career as a founder, or early executive, or a regional manager, enterprise sales rep, or customer success person, or handling support, or there's so many roles you can have a meaningful, interesting career while having a venture-backed company. And you have some options, literally, on life-changing wealth, sort of on that back end, while you're making a dent in the world with the mission of your business. So I'll just close this segment here with this concept of pay 10%. So I think when you're a post-exited founder, I think what is good for you and the ecosystem is to pay 10% of your net proceeds, whatever you made from your exit, and put it back in the ecosystem, whether through straight up some sponsorships of new things. People are always trying to start new organizations and whatnot, and they need that initial capital.
Right.
When I was at SendGrid, we put in the first check for $20K to Denver Startup Week, which has gone down to be a very large event. But you can do those sorts of things personally with the smaller events and things around. There's also direct angel investing. Write that first check to a startup. It doesn't have to be a check, but being a first check, it changes their pitch. It changes their confidence. I wrote the first check to Parkify on a Monday.
Wow.
So on Tuesday, they could pitch at a seed angel forum and say, we raised our first money. It's from Jim. And they got some more money on Tuesday. And then, on Thursday, I knew they had a meeting with the VC, which I thought was going to go well, right? And I was kind of front running the VCs. And we ended up raising about $1.2 million over the course of the next sort of 8 days.
Wow.
But and this was SendGrid alumni. Some people out of the engineering group are starting a new company. And so I think investing in sort of your alumni when you're a CEO, it's just if you're a university president, right? You want to see your graduates do well in life. And if you can help them with some seed capital, that's good. That I call philanthropic angel investing. So if you have, straight up sponsorships, just give money away. Then you have philanthropic angel investing, where you get a security back, but you don't really expect an economic return because it's just, very uncertain. But I think the third bucket and the pay at 10% forward is around being a limited partner. That way you can maintain lots of flexibility in your personal life. You don't have any meetings and all that stuff. But you can be an LP to either the fund that backed you, that's an obvious one. But I think being an LP, like in a first-time GP, so someone who is stepping out to be that general partner, raising LP money is super tough. And so if you can help spark some interest and motivation around that, that has a real multiplier effect as that GP can go and put that money to work, and they'll do that hard work of meeting all those startups and leading the term sheet and dealing with the lawyers, all that stuff. And you can be hopeful as an LP by helping them vet a few things or whatever. But I think it's sort of like being a board member. You want to be helpful but not intrusive, and encourage them on their journey as the next generation of VCs comes forward.
No, I think that's actually a very cool approach to investing, because so many, it's like the most, I think it's it makes no sense to me when investors say, I'm early stage, but the company needs to be generating tens of thousands of dollars a month in revenue. It's like, to me, that's not really early stage. Yeah. It's like, what are you talking about? It's like, so I find that's actually really quite interesting. So do you ever put money into companies where you don't know the founders or you haven't worked with the founders, or what are your thoughts on that? Because if you're giving $10,000, $20,000 away to these companies, like, how do you validate the people that you don't know or haven't worked for before?
Yeah. So usually, so my wife and I, we use the phrase, here's how we say no. We say, well, we do direct investing, people we do a battle with. So when I was a CFO and got fired a long time ago, the VP of sales in company also got fired by the same guy. Okay. That put us in a certain fraternity. We felt like, damn, right? And so, and I always thought that guy should be a CEO. So I backed in, kind of, like, whatever you want to do, I'm in. What are we going to go do? Right. But you're right. So we've done some other investing. One was Stream.io, which is chat and feeds as service. Again, kind of on that business developer. So we like the market. We understand it from the SendGrid days. And again, geography is a big part. So Stream was started in Amsterdam, but the founder's wife has a job with Crocs, the ugly shoe company here in Boulder. And so he moved to Boulder, but he also had gone through the New York Techstars program. Wow. And we're very close to Techstars with SendGrid having been the biggest win out of that ecosystem. I was carried their flag there quite a lot. And so that was good. And then we're part of a Boulder Angel group set up here in town by John Ives. And John's role is really about sort of the legal and deal stuff. And so, if John's in the deal, you don't have to worry about the legal and the deal stuff, because that's really his thing. And John had brought this other guy in, Judd. Judd was the founder of GNIP, and he is very technical, and he's also very particular. And so if Judd likes something, like, whoa, the product must be pretty solid, right? So that's good. And so when we met the Stream people, we could kind of check the box on the deal with John. We check the box on the product with Judd. And then my wife and I are like, okay, we're going to focus on like the market, which we understand from the SendGrid experience. And then, then around really the team. So the 4-H culture perspective developed way back in Decisioneering and then scaled at SendGrid, kind of applies the same way. And so we can do like a 4-H interview on someone pretty efficiently to get a sense for, is this the kind of person we like to have, in our lives and that we want to be hopeful to and work with, even as a distance, as a limited partner, or even extreme or direct LPs in that one. And this guy, Terry, that runs it is just fantastic. And so that's how you get comfortable with someone like that. The other company here in town is Section.io, and they do sort of edge computing as a service, which I can hardly explain. I was on their board 2 years. But they, it's hardcore developer stuff, by developers for developers, to make e-commerce sites and things run better, faster, cheaper. And again, really like the team. They're from Australia, from Sydney, and they had built up a business, mostly pro-serve, and they want to convert it to a product business, and they want to pick where in the world would be the best place to scale that business. And they did their homework, and they thought, Boulder, we want to come to Boulder and scale our business. And so they visited over a period of 9 months before their move. We got to know people like John Ives and us, and we're like, oh, okay, so they're going to commit to our community and move their company here. So we want to commit back to them. And so John Ives coordinated this first round. We put in probably 800,000 between John has a little fund, and some people write some bigger checks, like a couple $100K checks, to get that that initial raise done. And then they went through the Boulder Techstars program, right, to really sort of indoctrinate them and help them adopt a U.S. network. So it was that combination of they did their homework. They really made a big commitment to our ecosystem. The team had that hustler hacker dynamic where the hacker person was very credible, again, by having him meet the judge of the world, the other sort of strong hacker types around town. And then the business person, I can do that kind of vetting and like, oh, this is a sharp person. It's nice to see that they have that duality. And so that's how we can get comfortable with doing direct investing, and then actually join the board to represent this investor group that we put together. Because that's when you're raising money, you might not know this, that that's what you're really asking from the investor. It's not the check. It's you're taking up a deal slot, because any investor only has so much sort of mental headspace that they can allocate towards deals. And so if they say yes to your thing, it means you're saying no to all that other stuff they see, and that's tricky. So if putting a section deal together, all those other investors are like, they don't want to go on the board. They're like, hey, Jim, you're not busy, you do it. And so I felt like, oh, that's the way I can contribute. I certainly didn't write as big a check as some other people did. And so I can use my time and be on the board with the two founders and kind of help them through their, first, years of transition from a services business to a product business. And then Brad's fund came in and did a nice Series A round with Ryan McIntyre leading it. And then Ryan took over the board seat. And so now that's a Foundry-backed company that we're investors in, and they're off to the races.
Interesting.
So that's ways you can get comfortable with people that you haven't known or worked with when they do their homework. There's some other ones that are more thematic. When you're an LP in a fund, then when companies start to break out and do well and do subsequent rounds, then we create an SPV, a special purpose vehicle, just a standalone entity to do follow-on investing. And so we ended up investing in some companies don't know as well through the SPVs.
Interesting. The one thing that you keep mentioning throughout this show, if people haven't picked up on it yet, is it seems like, and you can correct me if I'm wrong, is everything you've ever done is basically built through networking and relationships. Is that fair to say?
That is absolutely fair to say.
I
think one thing I learned in my MBA program is that business is about people. And when we had a second year course taught by a PhD in Shakespearean literature, and we just watch movies like Do the Right Thing and Lawrence Arabia, and he's like, you get the people part right. And I think that's the whole 4-H system, and being clear on how you pick, vendors and customers and shareholders, right, and co-founders and employees, and it's just that thing. And you get that part right, and then business is always challenging. That's why it's exciting and fun and creative. But by having those people in the room that have that fundamental values consistency, it allows you to then argue about business stuff, very forcefully, and not be arguing about other things.
Interesting. So
I'll give a quick example.
Yeah.
One outcome of 4-H culture is we round in employees' favor. And so if everyone on the management team agrees that, we round in the employees' favor, that rule comes up a lot about sales compensation or just benefits and all this stuff, is that we're not trying to frag our own team, right? We think our employees, especially frontline employees, they're the ones creating a lot of value every day. Doing the support tickets, doing the sales calls, setting the, just all that work that he's done. And so we want to round in their favor, and it just makes it easy. And if you extend that to round in your customer's favor, that also makes a lot of decisions very easy. If you don't share that sort of orientation of plenty versus scarcity, we wrap that up in the happy value in 4-H, is that happy people have an orientation of plenty. There's plenty to go around. I don't need to hold on to mine or take what's in the middle so you don't get any. Where you definitely meet people in life who have an orientation of scarcity, and they feel like, wow, I need to really hold on to my stuff. And if there's anything in the middle, I'll grab it, before it's gone. All those people buying toilet paper the last couple of months.
Interesting.
That's So hopefully 4-H people went out raiding the shelves at Target. It's like, there's plenty. You'll be okay. Supply chain sort out, right? But it solves a lot of problems. And so we had very little conflict at SendGrid in particular. I think we had a pretty thoroughly deployed system where our CFO changed our billing system, and there's a lot of complexities in changing a billing system that's on this plan or that plan. And when we changed it, the customers were all concerned that we were trying to screw them. And whenever they called into support and they drilled into their bill and they saw what we did, they realized we were actually at every turn rounding in their favor. We were lowering our revenue and giving them more credit every decision. And it was super simple, because whether you're the CFO or head of support or you're a support rep, we all had that same perspective. We're not trying to pinch you for a nickel, right? We want you to be happy and excited being a customer.
Yeah, it actually blows me away. Like when companies actually do that, because it is so rare that you automatically feel like you're getting screwed, right? And nobody gets mad if their Amazon order shows up early, or somebody credits their account, or gives them a free month, or cuts their monthly fee by even $1. Like, nobody gets mad at that stuff, but they might call in and question it because it's uncomfortable, because it doesn't happen that well, or that often, sorry. But once they understand what happened and that you're actually not screwing them, and actually you're giving them some sort of benefit, whether it's financial or more features or whatever it is, they are so much more loyal to you, at least in my experience. And the chances of them actually going to one of your competitors goes down astronomically. Do you agree with that, or what are your thoughts around that?
That's absolutely the case. I mean, SendGrid, our pricing was almost 3 times as expensive as Amazon.
Wow. And
Amazon has a low cost, reliable service. Why didn't everyone switch?
Sure.
Economically, you'd say that's a good question, right?
Sure.
But the vibe SendGrid put out in the world was like, hey, happy to see you, want to give you a hug, want to buy you a beer, and here's a blue T-shirt. And the vibe Amazon put out into the developer community was, watch out, right? Because if you tell us your secrets, we will steal your idea and put it out in the marketplace in 6 months at 1/3 the cost, which is exactly what they did to Isaac, the founder of SendGrid. Because he told them what he was doing, and they just ripped it off. And so, with Amazon, it's like, hold on to your wallet, and there's no support. It's public support. You have to support each other. And we embraced the Rackspace perspective of support, which was, just overdue support, really lean into it. And so we did phone, chat, and email, global 24/7, which was expensive.
But huge, though.
Qualifying people. Huge. So when your infrastructure goes down, it means something's going well in your business. It's getting used. And when it breaks, you're in a panic. And when you can talk to someone who can fix it in 5 minutes, then that solves a lot of problems. Quick story on so makes your point is that when we changed the billing systems, and we had sort of optimized it for people, and then we had like silver, gold, and platinum plans.
Okay. And
if you were on a silver plan and you sent too much mail, you would have been better off on a gold plan, which is more expensive, but you would have lowered your bill, right? But you would have bought more in bulk.
Right.
And so we wrote some algorithms that would optimize which plan people are on to minimize their bill. And I think we rolled it out for some segment of our customers, and they hated it, right? Because while we were in fact lowering their bill, the optics of moving them to gold without them opting into it or whatever, because you get to do it at the end of the month. Like, oh wow, you spent a lot more than you thought. we'll put you on the gold plan to lower your bill. And they're like, fuck, I don't want that. So we're like, okay, we'll unwind that one. We'll let people, pay us inefficiently and maximize our revenue. But we tried, and of course, we would do things like developers sometimes will have a script go wrong, and instead of sending 100,000 emails, they'll send 100 million.
Okay.
And so their bill, instead of being $50, is like 5,000. And we got one bite at the apple, right? If you had a bill like that, a front level support rep could waive that just on their own accord. Because we understand what's going on. We don't want to make a business off of people's errors, right? That's no good. And so people love that. Right? Imagine if you had AT&T or something, and you used too many out of network minutes on an international call back when that was the thing. Like you get a bill for $800 instead of 80, right? They don't waive it. You're paying it, but we had no variable cost in delivery anyway, so it was easy to just waive it, and people were very appreciative. But if you came back every month saying, "Oh, that 5 million send wasn't real," we'd get a little suspicious.
Sure. No, interesting. I think like siding with your customer when they make a mistake. You'd be surprised. I'm surprised at how many companies don't actually do that. It seems like companies are getting better at it, but I'm still shocked by how many companies are just like, sorry, your screw up, not our fault. And you're just like, really? Like, there's a lot of competition for most companies now, right?
I think scaling is hard. You scale up a big business. Think of Wells Fargo, or these big businesses, or Oracle type business, Twilio type business, where you have support teams or customer success or whatever this is, or billing disputes department. You're going to have frontline workers, and you're going to have like a frontline manager, right? And they're going to have quotas and stuff to hit, and whose job is it to reduce revenue, right? Like,
fair.
And so when you call into a company, you're not talking to CEO or founder, right? You're talking to an individual employee, and that person's got to deal with their boss, that frontline manager. And if you had an error which racked up your bill, that just means their quotas getting relieved because of your error. And so if they waive that, they don't get any help. It's just, I think that's where it gets tricky. And if you're ever selling, like really thinking about how does that frontline manager how does that fit into your sales equation? Because what are their motivations, et cetera, may be different than what you're thinking at an executive level. Trying to do things. This just seems like a case in point. We've got all kinds of stories. We really decentralized our 4H is on honesty. There's a lot of trust embedded that first H, and it's delegations. So we would put a lot of power into that, into our support reps, and so they could fix problems very quickly. So they had powerful tools that we custom built that they could search and find whatever's wrong with that email and get that email flowing. And so it generated tremendous goodwill. And when you called in and you talked to a smart person with the right tools to fix your problem, that's terrific. And I'll give you the punchline. There's a downside to that, right? Okay. If you give someone that much power, why do big companies not do that, right? Because that power can be used for ill as well as for good.
Sure.
And we had a support rep who was well-intentioned, but they got socially engineered. And so, someone called up and said, geez, I lost my wallet, my dog died, my girlfriend ran over my truck, whatever the story was, and I need you to change my root password. Wow. And our rep did. And guess what, right? It was fraud. It wasn't his account. Wow. And so the true account owner finds out that SendGrid changed the password, puts something on Reddit or Quora or someplace, and it starts to trend. And the title was, Don't Trust SendGrid. And I was just like, oh, shit. Because trust is what our number one asset was with developers. And we had a support came to me, and he's like, Jim, we have a problem, right? And I'm like, I don't even want to know the rep's name because it's not relevant, right? What this person did is exactly what we've told him to do, right? Which is to fix people's problems using the tools at hand. And we have benefited from that rep's work, as long as they've been here, creating all this goodwill. And so we had to figure out a way to preserve the empowerment of the rep, or really any frontline employee, but not taking, huge corporate risk. And the support team came up with their own solution, which is sort of like a buddy system. These are sitting shoulder to shoulder, pre-COVID, and And when you had certain things happen, sort of like the signaling for a social hack, or before you did certain things like change a root password, you had to tap someone on the shoulder next to you and say, "Hey, man," or "Lady, like, what, here's what's going on. What do you think?" And that second set of fresh eyes, and having been pulled into the story, was enough of a check to make sure it didn't happen again. And those reps, kept the same amount of power and kept solving problems for customers. My experience at Oracle was like just the opposite, right? If you're a maintenance rep, you have very limited ability to do anything, right? It's just the first question you have to ask is, what's your maintenance contract number, which is a billing question. It's like, have you paid for support? And so one of our policies at SendGrid, which is somewhat controversial, is you did not have to pay for support.
Okay.
Anyone on the planet can call our 800 number, or could call our 800 number, or email us, and we will fix your email deliverability problem regardless if you use SendGrid or not. If you use Amazon, if you built your own stuff, if you use one of the little guys, like, we don't care. What we care about is making the mail flow. Our mission was super simple: make the mail flow. You do that, good stuff happens. If mail's not flowing, that's bad stuff. We don't want that. So really, really clear. And so as a support person, you'd never ask about, like, are you a paying SendGrid customer? It's just like, what's going on? How can we fix this? And generally, these problems are pretty easy to fix. And so we could just redirect a few things. And that is essentially like a sales team, because the person on that phone call is like, boy, you people seem good at this. It's like, yeah, that's kind of what we do. It's like, and it's really cheap, right? And free to start and all that stuff. And so don't ever tell our support people they were salespeople, but our support people were salespeople. Really, our customers were our salespeople, because they would tell other potential customers, like, "Hey, why are you messing with email? You should just let SendGrid do it." I mean, you have enough things to worry about building cloud apps. That email is just not something you should worry about. So yeah, that was a policy that kind of wraps a lot of this 4-H thinking and culture and management process around, and really created a very powerful and loyal base that wouldn't switch. If a small competitor had a feature we didn't have, or Amazon was cheaper than us, no one could replicate our feel, right? How people felt in dealing with SendGrid.
No, I think that's actually really good advice. But sadly, Jim, we're coming to the end of the show. So how about we close with mentioning where people can get more information about yourself, and anything else you want to mention? Well,
been very active on LinkedIn since it was first a thing. Another story there, say for a different day. LinkedIn.com/n/JimFranklin08. And also Twitter is just @JimFranklin. And really Twitter is where I post and talk about sort of VC and funding things. I'll be teaching a class on venture capital this fall using the hashtag CUVC2020 to sort of pull together thoughts and commentary around fundraising and the startup and founders journey and life.
Perfect, Jim. Well, I really appreciate you taking the time out of your day to be on the show, and I look forward to keeping in touch with you, and have a good rest of your day.
All right. Thank you very much.
Thank you. Okay, bye.
Thanks for listening. Please visit our website at buildingthefutureshow.com to join the free community, sign up for our newsletter, or to sponsor the show. The music is done by Electric Mantra. You can check him out at electricmantra.com, and keep building the future.